Hi there and welcome to Jill's Quest for Riches. Now in today's episode I'm going to show you what happened behind the screens when I was making my shortlist of the 3 top ETFs on the BUX Zero platform to use for passive investing. So this is more a bit you following me over my shoulder. I hope this is interesting for you to learn from. Before we start, big disclaimer, again, I am not a professional financial advisor. What I mention here is purely my own experience, my own thoughts and ideas. Specifically, the approach I use here for BUX is very atypical. I'm just going through the complete list of ETFs. Usually that's not really feasible, but at BUX they only have 40 something ETFs, so it's relatively manageable. For other platforms I will be using another approach. And by the way, this morning I got a notification that actually there's a few new ETFs in the list. So my list is already not up to date, although I'm quite confident that the short list that I made is still very, very relevant, and the things you can learn from me going through this list as well. I'll also put the link of both the platform that I use to make comparisons between ETFs, as well as a link to the list of ETFs that they have on the BUX platform. With all of this out of the way, let's get into it. Alright, this is the page of BUX where we have a list of all the ETFs on their platform. It's a list of about 42. We'll go over them relatively quickly to see which ones might interest us most. First one here we see iShares Nasdaq 100. So iShares, those are the ETFs that come from BlackRock, one of the biggest, no, maybe the biggest investing firm, or at least in terms of assets under management. So that's a good thing. Then Nasdaq, it's specifically the technology shares of the US, so maybe too specific for us today. iShares, same, but healthcare, sector specific, so that's maybe not the first thing you should look into when you start out with passive investing and index fund investing. So this is already, I think that's not even an index actually, it's sector specific. Same for socially responsible, so that's a theme. Then here we have Asia Pacific socially responsible, so that's a market, Asia Pacific. And then again, socially responsible. Could be interesting, but maybe not the first thing we're looking at. Nikkei, that's Japan. Let's see here, Eurozone bonds. So we're not looking into bonds today, but bonds can be interesting if you want a more defensive, more safe investment. Of course, you will also have less returns in most of the time. Same here, so this is only US dollar bonds on 1 to 3 years. Again, bonds, but this time inflation linked. So I think this is very interesting to protect your capital against inflation, but it's probably not going to do much more than that either. This is the first one that could be interesting for us, the Lixor All World Index ETF. So what we're gonna do here is I'll copy the ISIN number, so this is the unique identifier of an ETF, and I'm going to introduce it here in Just ETF, a website that I use to look up more information about specific ETF. So what do we find here? The first things we're looking at, UCITS, but actually I don't remember what it stands for, but it means that it's in accordance with specific European regulations, so that's a good sign. That doesn't mean that when an ETF doesn't have this label or this in the name, that it's not a good ETF, because some of the requirements are, for example, that you have a prospectus in each language in the European Union, I think, so that could mean that you don't have the label because you're not providing a Portuguese and an Italian translation of your information. That's not necessarily a problem in my opinion. The ACC stands for accumulating, and that's very interesting, but I'll get to that in a second. So what do we see here? We see that one share in ETF costs 14.19 euros. That's interesting. It's a low amount. That means that no matter with which amount you invest per month or per year, you can definitely afford 14 euros. So that's very good. And here we see that it's at the highest point in the last 52 weeks. So the lowest point was 10.3 and now we're at 14.19. What else do we see here? This is interesting as well, the fund size. How big is the fund? Why do we want to know that? Because funds that are too small, they have a risk of getting liquidated. I don't know exactly what the consequences of that are, but even in the best case, that means that after a while I have to reinvest the capital that I've put in the liquidated fund, and I have to find another investment to put it in. Since I'm looking for something passive to invest in, I want the fund to exist, let's say, eternally. So what we have here is 1,354 million. So the size of the fund is 1 billion. That's very big. That's fine. That's actually great. What else is important? The fees. So we're paying 0.12% per year in fees. That's relatively low. As you can see here, a comparative measure. So apparently the lowest they have on this platform is 0.04. I think there's even lower than that, but that's really, really low. And then you can have stuff going up to 1.38. So I consider 0.12% to be a very low expense rate. What else do we want to know? The replication. What does that mean? This is the way they reproduce the returns of the index they are tracking. So here we are following MSCI World. But how are we doing this? Well, physical. This means they have stocks in all the companies that are within this index, as opposed to having derivative products that follow the same returns as the index would do. Why is that interesting? Because if you have the physical replication, then there's less risks involved. Then what do we have here? Its currency is US dollar. The volatility, which is also the risk, is relatively high. It's at the right side, but today, any ETF that we will be looking into will be in the right half of this chart, let's say. I don't know if it's a chart, but anyway, we will be looking into the more risky investments anyway, because we're restricting to stocks only, because that's the most interesting in the long term. What do we see here? The distribution policy, it's accumulating. That is very interesting, especially if you're from Belgium. First, what does it mean, accumulating? It means that this ETF holds stocks in different companies. Some of these companies do give a dividend. The dividend then goes to the ETF or the fund itself. And then the fund has a choice. Either it gives the dividend to you, the shareholder, that's called distributing, or it uses the money from the dividend to reinvest in the stocks that it is investing in. And that's called accumulating. In Belgium, you do not get taxed on gains in capital on stocks or ETFs, but you do get taxed on dividends. So ideally, they don't give me the dividends, they reinvest it immediately. That's what suits me best tax-wise. Although it's not that big of an issue, especially at the lower volumes, you can still recuperate the tax nonetheless. Then performance. So here we see that the performance is quite stellar in the last year, but to be honest, I think nearly everything has been going up quite strongly in the last 2, 3, 4 years. So nothing surprising here either. The exposure. So the top 10 holdings we see here, it's Apple, Microsoft, Amazon, Facebook, Alphabet. So what's clear here is these are all American companies. Even though it's a world index, if you see the exposure by country, where is the money of the ETF mostly invested, it's still 65% in the United States. But there's also Japan, UK, Canada, and quite a lot of other countries. Let's maybe enlarge the list a bit. Oh. So France, Germany, Netherlands. So that's interesting. And then sectors, it's also relatively well scattered. We see that there's a lot in technology, which is clearly here in the top 10 list, seeable as well. That means that this ETF still has a big exposure to technology companies. If you're convinced that technology companies are overvalued today, be aware that you do have exposure to these technology companies through this ETF nonetheless. As we mentioned here, the performance, actually the absolute performance is of course very interesting once you have the ETF, when you're invested in it. But today what interests us is how well does this ETF follow the actual index that it should follow. So how do we do that? We check here again. So this was the Lixer All World, yes. And we open the essential information document. I'm sorry, this is in Dutch. I couldn't find the page in English on BUX. And here we will find mostly the same information as we found on the Leaksor page. This is where they get the information. And this is what interests me. So here we see the benchmark to which it should be compared and the actual performance in 2019. And we see it's very, very close. So that's really great. What we also notice is that they only have numbers for 2019. So I'm quickly going to check whether we know when the fund was established. Is it stated somewhere? Voilà. It was established beginning 2018. So it's actually still a relatively young fund. That's not necessarily a big issue, but it's something to be aware of. The fact that it has a lot of money under management reassures me more than the young age of the fund would frighten me. So here we are again, looking for the next ETF that might interest us at BUX. So this is the one we just checked. Here we have also iShares, so BlackRock EU dividend theme. I'm not looking specifically for dividend stocks at this moment. Here we have the UK Financial Times Stock Exchange. Doesn't interest me at this point, but if you're from the UK and you want to invest and you strongly believe in your local economy, then this might be an interesting one to look into. Next one here on the list is iShares Emerging Markets Asia Pacific, excluding Japan. Emerging markets could be interesting. It's definitely more risk, but we're not looking into this one today. We're really looking for the plain ass, vanilla, simple, passive investing stuff for you guys. Again, emerging markets, Eastern Europe this time. But if these things interest you, I'm not stopping you from investing in them, but it's not the number one thing that you should be looking at when you start with passive investing or index investing. Oh, this one on the other hand, that's exactly what we're looking for. Vanguard, so very, very big issuer of indexes and ETFs. S&P 500, that's the most known index for the American market. So S&P 500 stands for Standard & Poor's 500, the 500 biggest listed companies in the US. So that's definitely one we want to look into. Let's put the identifier in Vanguard S&P 500. So we see again UCITS, that's interesting. What else do we have? So the amount per share in the ETF is 77 euros. Should be feasible to put that aside every month. What else? Yeah, it stands at its highest point in the last 52 weeks, but that's going to be for most trackers today. At the moment that I'm recording this, we're the 5th of November 2021, by the way. What else? So very big fund, that's good news as well. Also relatively old, so it's nearly 10 years old, so that gives a lot of reassurance. Replication, also physical, so they actually do have stocks of the 500 companies in their fund, so that's great. US dollar, obviously, we're tracking the US market. Usually when you find a hedged one, the costs will also be will be higher, which by the way brings me to 0.07%. Those fees are super low, so that's super interesting. On the other hand, they distribute the dividend that they receive. Okay, not necessarily the end of the world. I would have preferred accumulating, but hey, they do so quarterly, so every quarter I get dividends. What else can we find here? Yeah, stellar performance again, obviously. The exposure, so what do we have here? Again, the top 10 companies, Microsoft, Amazon, Facebook, Alphabet, that's Google. By the way, the ORD stands for ordinary shares, so those are the normal shares, as opposed to sometimes you have different types of shares like preferential shares, or I think subordinated shares as well. Berkshire Hathaway, that's the company of Warren Buffett. JP Morgan Chase, that's an investing bank. So yeah, obviously United States is very well represented. We are looking into the 500 biggest companies of the US, right? Why do we still see other countries in this list? Well, sometimes it's interesting, even if you're actually an American company, to put your official headquarters in, for example, Ireland for tax reasons. Then the sectors, again, technology sector, very, very present. This one has been booming for the last few years, and especially since COVID, but also healthcare, consumer discretionary, telecommunications. So there's multiple sectors, but here you see that nearly 1/3 is in technology sector. One last thing I want to check for this ETF is the same thing I checked with the last one. How does their performance compare to the index they are tracking? So here, as you see, this is the information provided by Vanguard. Very nice logo. So it's another layout, but it basically includes the same information. We see here, just as we saw on the interface of Just ETF, that it's at the riskier side of the scale, which is normal because we're looking into stocks. This is the chart I was interested in. So the light gray is the index, and the dark, the black actually, is the fund performance. So here again we see that it's mimicking very, very well. Also when it goes negative, of course. So that's what I'm looking for. That's great. Let's look for some more interesting ETFs on this platform. So if we continue here, we have Asia Pacific again. Well, if you're interested in this market, then definitely look into this one. Europe dividend team. So I'm not going to explicitly look for dividend companies either. Vanguard all world dividend team. That's already more interesting, but still dividend. Cybersecurity, so this is also a specific team or sector. Here you have automation and robotics. I actually have this one in my portfolio, and it gave me quite some good returns so far. But this market is maybe, well, it's difficult to say up front, but it saw some massive growth in the last few years, and you're never sure whether that will continue or maybe is a bubble that will burst. So definitely not going to give any advice on this on record. Lixor, a Japanese stock again, so I'm not looking at Japan. All world socially responsible. I'm staying away from this as well. Socially responsible. The German DAX 30. So I'm not going to invest in this one, but if you live in Germany and if you're confident about the market and the economy of Germany, then this might be actually an interesting one to look into. iShares EU Top 50 index. So this is interesting. I'm from Europe, so the European market interests me, even though the American market usually performs better, has been doing so in the last, I think, 30, 50 years. So most likely will continue doing so. This is more interesting. So here we're tracking 600 companies instead of only the top 50. So I am definitely looking into this one. It's from iShares, so BlackRock. That's also interesting. So let's look at Just ETF. Here we go. This one. So also UCITS, that's great. What else we find? 48 euros. So that's reasonable. That's definitely something you can put aside every month, I think. Fund size, very sizable, so that's great. Also has been around for quite a while, so it's definitely a credible fund. Physical replication again, so that's also great. Currency unhedged as usual. It's more on the risky side, which is absolutely normal when you invest in stocks. The fee, 0.2%. That's maybe the highest one we've seen today. Let me check. 0.12. Yeah, so that's the highest one we've seen so far. To me, this is still okay. It's somewhere around average, in my opinion, or averagely cheap, so it's still fine. But compared to all ETFs in equity, it's clearly very cheap. What did they do with their dividends? They distribute them, so not ideal, but fine. What else do we see here? So performance stellar again. The top companies, and we see here that it's quite spread among the different countries within Europe, so that's great as well. Sectors, it's also a bit spread. What I like here is that the tech sector doesn't represent too much of the total investments in this fund, because it's very well performing one, but it's also a very inflated sector at the same time. So here we see technology only 8.3%. And then the last thing I always want to check is, okay, how does the performance compare with the index that they are tracking? So yeah, looks great, right? You see the index and the fund, they're mapped quite well. I'm happy with this one. So that one stays on the list as well. What else can we find? So here, France, not interested. Telecom sector, sector specific. Same for banking, educational tech. Sustainable future of food. So this is something that does interest me. It's 45 companies, but not for the video today. I'm going to look into this later, because I do believe in this movement, but depends a bit which companies are in the ETF, whether it's interesting or not. Cybersecurity, that's again a specific industry or team. Vanek, a sustainable world, equal weight, multi-asset balance. Not what I'm looking into today. High dividend ETF. So again, that's a bit too much focus on dividend, in my opinion. Vanek, European equal weight usage ETF. So this one might be interesting, although I think it's only 100 companies. That's less interesting. And Vanek is a smaller issuer, so there's a high chance that. There we go. All right, it's this one. So the first thing I'm going to check here, which is my main worry, is, no, it's quite all right. Okay, but so I was mostly worried it's a smaller issuer, Vanek, so I was mostly worried about the high expense ratio, but the second worry is indeed the fund size, and 50 million is quite low. I would only feel comfortable as of 100 million. So this one we leave out for now, and let's move to the next one. Let's see what else they have. This one might still be interesting. Global equal weights. Well, that's curious. Okay, but so that one has been merged or liquidated, so not available anymore. That's weird. What else do we have? North America equal weights usage, but it's 100 big companies. So North America equal weights. What else do we have? Government bonds, global real estate maybe, but not for today. And voila, Netherlands, that's too small. That's too small. So that's it. We went through the complete list. As you see, this approach is usually not feasible on platforms with more ETFs, but for BUX it made absolute sense to just go through the list. All right, so this is how I went about it and came up with my short list of 3 ETFs. Let me know in the comments whether this was interesting for you to learn or just a way too long, not so interesting video. Myself, I ended up buying the S&P 500 ETF because I was actually a little bit ashamed that I still, after I think 4 or 5 years of investing, still didn't have any money invested in an ETF tracking the S&P 500. And if you like this video, if you want to see more, like and subscribe. See you in the next one. Bye.